Hey, what's going on, everybody? It's Nick from North Dakota here today. And it's January the 4th, and I'm going to be looking at a bunch of coins that were of interest to you. Earlier today, I put out a poll asking for coins of interest to you, and I picked the top 5 coins that were of interest to you. This poll was held in our Telegram channel as well as on our Instagram channel, and the top 5 coins that I'm going to be looking into in terms of chart analysis are DOT, MATIC, XRP, Luna, and ADA. I'm also going to go through 3 other coins of interest to me that we could say are honorable mentions. So we're going to be looking at support and resistance levels. We're going to be looking at the daily price action, and we're also going to look at price levels in the sense of the projection as to where price could go, whether it was bullish or bearish. And all of that is going to come right after this. All right, so the first coin on our list for today is DOT. And if we just zoom in on DOT on the daily, immediately the first thing that comes to my eyesight is this 200-day moving average. And we can see it's just running flat. And it's holding some support here, and we've now kind of dipped underneath it. Just zoom in on this so you can see what I'm looking at. So we can see that price action has dipped below, come back above, rejected off the 34, come back to retest the 20 SMA, and has now reclaimed the 200 moving day average, but just barely. It doesn't have much strength. However, this is the first thing that's kind of caught my eye, is that we're trading above this right now, and we are still trading below the 50. So what this is kind of telling me is that the trend is still bearish. It's still weak in the sense of the bullish side of things. However, we are in a consolidation pattern. And if I were to map out the consolidation levels, you can see what I'm talking about. If I just kind of map it like this, I'll show you that our support is tucked in around here. What this basically gives us is our channel, right? So you can see price action deviated outside, come back up, rejected, come back for support, and now we're trading back in the middle of the channel. So our resistance is sitting at about $32. Our support is sitting at about $26. And what this means is that, until we see price action break one of these levels, we're just going to continue to see this sideways action in the price. We can see from this structure here that we have back in September, there's a lot of great support here. And this trend line actually comes and stretches right across to it. So if I were to just stretch this line out, you can see where that support line is coming from, right? You can see our support is coming all the way from what was initiated back in September, and now it's come back to run support. So this is a very, very key level at that $26 range. If you're holding DOT, you want to make sure that this level holds. We don't want to see this level break. However, the other side of this on the bullish perspective is we do have this deviation that happened here. Based off Wyckoff theory, this is known as a spring of sorts. And what this has now done is it's created what looks like so far as being a higher low. So in order for this to continue to play out, we would need to see price action break above somewhere maybe around here, right? Get above the 50-day moving average, maybe retest the structure here, somewhere in this range, come back for the throwback to retest the structured resistance and start to move up to higher levels. And what this would do, let's map it this way so you get a visual how I'm kind of seeing it. It could look something like this. We could get a move into this range, like I said, come back for the throwback, and that price action to come and retest or retouch the level around here. Let's pull this up. So you'd get that support line around that $45 range. And we can see we have a previous fractal high of about $54, $55. So in terms of DOT, once again, we just need to see how price action is going to respond inside of this consolidation channel. Once again, we are seeing it above the 200-day moving average, which is great. However, I'd like to see it get back above the 50-day moving average, get into this pocketed area around $35, come back for a throwback, which would be really nice. This would be a great entry if you're looking for a trade to ride this to the top side here. So in terms of projected prices, in the event that this were to go bearish, we would be looking at levels coming to the lower Bollinger Band, probably around that $25 range. And at that point, if you're holding DOT, you want to make sure that this is holding very, very strong. But ultimately, then it would be creating lower highs and lower lows. This could then start to get a little bit uglier and go even lower. I don't know if that's actually going to happen. Like I said, it just seems like there's too much, or there's a lot more bullish sentiment versus bear sentiment. I do believe we're still in a bull cycle, so I'm not 100% sold that this thing's going to come barreling down to $12 again. But once again, we just keep it simple, wait for the levels to kind of play itself out. We know we have $26 in terms of support. We know the Bollinger Band lower limit is sitting around $23. So like a psychological level would be like $20, right? As saying as a very key level of support, which holds weight if you look at this cluster here, right, in that $20 range. So from a bearish perspective, those are the support levels that I'm looking for. And in terms of the bullish perspective, we could start to see price action once again. If it can start to create higher lows and higher highs from this micro perspective, this would then start to bring price to around that $44, $45, and then ultimately back up to about $53. Now, what we can look for in the future, if we just use some Fibonacci, as well as some fractal correlations and calculations, from a Fib perspective, what we can see based off this massive fractal, right? If we run a fractal extension, our golden pocket ratio is sitting around $82, and we also have a full range around $100. Now, this is not going to play out in a week. This is probably going to take a little bit of time. I would look at this as more of a midterm time frame projection. But we can use Fibonacci to kind of be a guide. And if we were to run some fractal calculations, what we'd be looking for is a depth, right? The depth from this fractal retracement. So the distance from here to here should equal the distance from here to up here. And if we run that, I believe this should take us closer to the 786 fib, if I'm not mistaken. And if we line this up, yeah, it takes us right around that 786 fib range, which is around $90. So, this is a very key area here when we start getting above 80. So $80 to $100, I would say, is like a great place to, if you're looking at trading this from a midterm time frame, this would be a great place to take some profits. Once again, from a midterm time frame, like it's not going to play out next week, but it could play out over the course of about a month to 2 months. But I don't have a crystal ball, so it's very hard to say when. But in terms of calculating the price levels, we can use fractal calculations as well as Fibonacci to help guide us. So that's DOT. Next coin to look at on the list is a coin called MATIC. And if we look at MATIC, MATIC has been on an absolute tear since around September, the end of September. And, this is a great structure. This is what we want to see in price action, right? Like it's just steps where price action moves up, comes back, retests the 200, came back up, retest the 50, goes back up again, comes back down to retest the 50. And once again, we're creating another higher high, right? So these are higher highs, higher lows, higher high, higher low, another higher high, and we're now starting to create the higher low. And right now we're retesting that structure of support around the 2.4 range. And if you look to the history, we can see that there is key candle closures here, previous highs set around that 2.4 range. So, this is a very key pocketed area. I wouldn't be surprised to see price action start to retest some of these moving averages, right? So, we already broke through the 80 EMA, we broke through the 20 SMA. If I just zoom in on this, you can see that we're now starting to dip below the 20 SMA within this Bollinger Band. And, this leads us to that 34 EMA, which could start to come into play. And as it is, has confluence with our support and resistance here at about 2.3. So, this is the next level of defense, so to speak, where, we could see a bounce from here. However, if this does break, well, then I would assume that price action is probably going to come back lower and start to work itself out around the 50-day moving average. And once again, there is confluence in this range, right? There's confluence from here, right, with the 50. This is a very key range here, I would say, that, we could see price action dip inside of, right, which takes us to about that 2.15 to, 2.3 range. It's 15 cents. We know the 34 EMAs here, but we could see a wick come into this area for like a liquidity fill of sorts. And, if it does break a little lower than this, it's important to understand, where the supports are. So we know that there's another key level of support down here. I can map that in just by putting something like this here and show you that, we have support there around that $2 range. So in the event that price action were to break through here, there's another level of support here. And we know that the 200 is, just showing very, very key support from the bottom here and just grinding its way back up. And currently the 200-day moving average is sitting about 1.5. So price action is trading well above the 200 and well above the 50, providing great support. In terms of the future of where this coin's going, if we were to look at the fibs once again, try to map something out here, I'm just going to tighten this up and use the 3-day chart just to put some more perspective on how high price could go. We have our anchored bottom around here, so we could technically use that as our base. What I'm going to do is actually use our position here, which is that lower high. So price action had our base. We came up, we came back down for the first throwback. So I'm going to use this as our anchored bottom and our current anchored top up here, just to kind of guide us. And this is just one way to do it. We could also use another anchored top, which would be our previous all-time high and then the previous bottom, and measure it out that way. So we can measure it both ways, see what we get. So if I were to just measure it this way, start, see how we get some confluence in this range, see how the wicks and the price action of the candles respond. So you can see that we get some good response when we measure it this way. And if we look at it from this perspective, what this does is it starts showing us where some key ranges are, right? We have a golden ratio here sitting around $4, which is a psychological level. And we have the 2 fibs sitting around 4.8, just tucked in a little under $5, which is another psychological level. 1.272 sitting at about 3.4. So, within this range of, 3.5 to about $5 is a great place to start taking some profits off the table if you've been holding this coin for a little bit of time and you're playing these midterm timeframes. In terms of the depth calculation, like I showed with DOT, I would probably put something like this into play. This is a little bit more conservative. If I wanted to get a little more aggressive, we can see that we get right up to that 2 fib at about 4.8. If I were to be a little bit more conservative and using the body of the candle closure versus the wicks, this kind of lines us up just tucked in under that 1.786 fib, which is about 4.4. I have alerts set here just to kind of keep me in tune with what's going on. But, once again, between that $3.50 and $5 range, I think is a safe place to start skimming, like to take profits off the table just based off the measurement. And what we don't want to start seeing with MATIC is price action obviously going up, but then starting to break these MAs entirely and then ultimately come further and further down. We don't want to start seeing the structure start to break, right? We know we have our previous all-time highs up here. We want to make sure that these levels hold strong so that it provides support to move back up to the upside. So that's MATIC, what I'm looking for there. The next coin on the list is a fan favorite, XRP. Clean this up for everybody. And, when we look at XRP, XRP is a coin. I always joke about it, that it has 2 speeds. It's either in a coma or it's going parabolic. And, here's that parabolic state, right? Where in a couple of days, it's just absolutely flying. Let me go to the daily view. So if we look at this coin from a daily perspective, absolute massive crushing growth. However, at the same time, it does go the complete opposite way, right? And start to get into that kind of coma phase where price action just completely crashes and then enters a coma, right? It's like it dies and then goes into a coma. So right now what's happening is we can see it's just in a heavy consolidation pattern. No matter how you look at this thing, there's pennants within pennants of this chart inside a more massive pennant. And what I mean by that is, you have a trend line that you could draw simple as this from a bigger picture, right? Something like this. I'm not trying to be perfect here with my lines, but just to kind of visualize the point I'm trying to make. We have a massive pennant structure here, started all the way back in April of 2021. And, price action is, you could say, it's probably looking like it's closing this, and that ends towards the end of the month. So this is just one thing to look at, this massive pennant. And like I said, there's pennants within pennants. And what that means is we had a huge move down here and another move up here. There was a pennant that we could have drawn or mapped in like this, for instance, right? This is another pennant here. We could also say, well, there's another mini pennant in this position here as well, right? From here. So, we can just keep drawing pennants within pennants. However, it's still within a much larger, massive, pennant structure. So as reliable as that is, I personally prefer using horizontal ranges and whatnot. So when I look at from a horizontal perspective, one key thing that stands out to me is that we have a very key level of support sitting around here, which is at about that 88-cent range, right? I've mentioned this before and shared lots of charts on this to my private members in Patreon. That 88 cents is a very, very key support level, and we never wanted to see price action dip below there. As we can see, price action has had great support from this range. If I back it up, you can pretty much see where I'm talking about. So you can see here we've had great support off this range, even though there's been some deviations and support here off the 200. Once it did break down, obviously price has come below it, create a bit of a double bottom here. Price comes back up above that level, and then here we get that throwback retesting that area, and then price continues to consolidate, and it is not able to break this level here at around 1.3. So 1.3 is another key resistance level. And I'll map that in as well, just so we're on the same page. So 1.3, a very, very key level of resistance that we have to see what price action is going to do when it gets up there. However, we're not there yet. And why do I say we're not there yet? Well, if we zoom in on this chart and that 88-cent range talking about earlier, you can see that we had our December 4th correction, that massive manipulated price dump that we had, brought price down to about 60 cents and got immediately bought back up, which is really, really good to see. However, what happened was that price action still maintained below that 88-cent range. And even though we had this deviation here, we can see it got rejected right at the 50-day moving average. Then it kind of battled here with the 34 and the 8, and then ultimately ended up correcting below again the 88-cent range, tucked in, finding some support around that 79-cent range. So it's a very, very tight pocket. Price action is below all key moving averages on the daily. And even though the moving averages are consolidating and squeezing, it's just more or less telling us that, price action is in consolidation right now. But if we use our horizontal resistance and support lines, what this tells me is that we are below a key support line now, which then means that we're now having to look to see, well, where is the key support below that? And when I look at it from that view, what I start to get, if I just kind of map this out this way, is I see another trend line here. And what I get is a price point of about that 78 to 76 cent range. Even though price action has not really come back down, it is opened itself up for the possibility that if price were to continue to go lower, with the 8 EMA, acting as like our trend line, right? We can see how the trend follows the 8 EMA, whether it goes up or down. Right now, it's following it on the way down. This could have further follow through, sweeping back down into that the higher 70-cent range. In the event this were to break, we could start looking towards the mid to low 70s. Ultimately, there is a possibility of a depth fill, right, where price action could continue to go lower and reject and complete the depth fill, where we had our December 4th massive wick down that came here, right around here. So we have to be very, very cautious now with what price action is going to do, right? Because it is in a consolidation range. So if it breaks lower, I would expect something like this to play out. Seeing price action kind of break down, have a pullback, and then follow through towards that 60-cent range, right, where there's a lot of support here. Now, that's just a bearish perspective. From a bullish perspective, we want to see price action, if it does come back lower here, to find momentum back up to the upside, come back down here for a retest, have the throwback successful, and start to make its way back up this way. And I'll mark this with a green path. So we have our bullish and our bearish. And then obviously there's a neutral path where, we just see ultimately more of the same consolidation, right, in that kind of that channel here. So if I just do this. So, 3 different paths right now: bullish path, bearish path, and our neutral consolidation path, waiting to see which way we break. Break up, we look for something like this. Break down, we look for something like this. The other thing is, if it does break up, the 200 is up here, the 50 is up here. There is a death cross that has happened, but that usually symbols symbolizes, what we already know. It's a laggard pattern. Price action has already corrected significantly. So we're going to wait and see what happens with XRP. In terms of the bigger picture, though, for XRP, just kind of using Fibonacci again to our advantage, as well as the fractal measurements. I would measure this right from the bottom. It had a huge dump, but the bigger the dump, the bigger the pump. So what that means is that we could start seeing a projection where this coin starts taking price action back up to that $3 range, maybe even the 350 range. If we use Fibonacci to our advantage, once again, we could map something like this. This should show us some key levels of interest, right? So if I just kind of map it in this way, what we start noticing is, the 0.5 fib has played a very, very key role. Here's the golden ratio where we had price action kind of reject here. So ultimately, with price action where it's trading at the moment, just zoom in on this a little bit more, we are trading below that 0.236 range, just based off of where I've placed this fib. So if I just move this up a little bit here, tighten it up, you can see we're just trading just below that range. So, ultimately we need to see price action start to turn around and start to retest some of these fibs. In the event that, XRP starts to regain control of this chart, we can see that once again, that our price targets are somewhere in that $3 range. The golden ratio is sitting about 2.85. So I would say, 2.85 to about 3.5 or 3.4 is a very, very key range to look at for profits in terms of where this price action could go in the mid time frame. So, and I'm not saying this is the top. I'm just saying this is just the midterm time frame projection based off this fractal alone. So that's XRP. The next coin on the list is a coin called Luna. Terra Luna. This coin has also been doing very, very well, performing very, very strong. You can see it's just in a massive uptrend. And, from what I'm seeing with this coin, what I like about it is that it's had a steady growth similar to MATIC, where price action just kind of like a staircase, right? Just kept going higher and higher. Every time it went up, kind of came down to the 50. Very, very predictable, right? Multiple times. You could have easily traded this and taken a chance on it every time it came back to the 50. Even here, when price action broke out, we had that nice throwback that came right back down, guess where? Right to the 50, which is quite remarkable. And I could just map this trend line in like this, just show it to you this way. But you can see we have our resistance here, breaks out, has a throwback, retest the 50 in confluence with our support and resistance here, and then we have it absolutely take off. Now, what's happening here is price action went significantly higher. We could measure this fractal from here, and as you can see, it pretty much nails the top, right? This fractal calculation from the top here anchored to the bottom basically puts us right to the top at about $100, which once again is a psychological level. These psychological levels come into play quite often. On my Patreon private membership, I tell the members all the time about these psychological levels. We already knew $100 was coming. I already posted charts about this well in advance. So a lot of people who took the trade had already sold pretty much at the top. Now, what's happening next is what happens next, right? How far is this going to go lower? Is it going to stop at the 8? Well, obviously it did. It went a little lower. Is it going to stop at the 20? It's looking like it's retesting that structure as we speak right now. So we're going to have to wait and see how Luna is going to play out. If I was to be a little bit more conservative, I'd be looking at this level right here. And the reason I say this is because this is a very key level of support here. It's like a demand zone. And I'm just going to make this a little bit bigger so everybody can see. What I mean by this is that, price action is already starting to flirt with this area of support at around $84. If this were to break, I would be looking very, very keenly into that mid to high $70 range for a buy, because this would be a perfect opportunity where we've already seen it do something like this, right? Right in this pattern here, right? We had the breakout, and then we've had the throwback right to the previous level of resistance, which then gets flipped into support. So if that were to happen again, we have our two peaks right here. I would anticipate that price action could roll back around and retest this range again, similar to what we saw here, which would then allow price action to propel itself to further levels. So the question then is, well, how much higher could this go? And how much lower could this go? So just to start on the bearish perspective, if this level were to break down, well, this is now leading us to our next key level, which would be sitting right where the 50 moving day average is, sitting around $66. In the event that price action were to find support here and bounce higher, what we can do is use Fibonacci to kind of guide us. So I would just use it from about here and measure our retracement. And as we can see with our retracement, this zone right here is putting us right in the pocket of the golden ratio, right? When I was talking about that mid 70s. So we're seeing confluence here in this range, which is great. What this also can show us is how high things are going to go, right? So if we were to just measure it from our anchored high to our anchored low, we'll just move it in like this. What we can start to see is where price action could potentially move to next in terms of a more massive move. And what we end up getting is price action somewhere around that 135 range to 150 range is kind of where the projection is with the golden ratio here. Now, of course, I'm not saying hold taking profits on the way up. I'm just saying, these are kind of key levels that I would be looking for in terms of seeing when things start to get overheated again, similar to like what we did here when we saw price action get overheated. Now we can see that there's going to be, if price action were to dip into the zone, we can measure that level and give us a bit more of a guide. And you can see here, even if price action were to dip into this zone here, it does put us right into that area where the golden pocket is. So I am eyeing this level as a profit-taking area between 135 and 150. And in terms of looking for a buy, I'd be looking in that mid to low 70s range to see if we can get a nice buy-in in that area. This would be a good move to the upside, providing potentially a move of about 70 to 80%, and maybe higher depending on how much you will to hold. So that's what Luna's looking like. Great chart. And the last requested coin on the list, rounding out the top 5, was ADA, Cardano. Now, this coin is looking very, very different from a lot of the other coins I shared. It has more of that XRP look to it, right? Where we're clearly, in a downtrend, right? Clearly, price action is going down. It's not going up like we saw with Luna, like we saw with MATIC. Price action is going down. So we have to be very, very cautious with a coin like this because, the trend isn't our friend unless you're shorting this thing. If you're looking at, trying to figure out where the bottom is on this coin, it gets really, really tricky. What we do know is that there is very, very strong support in this range right here, right? As we can see, because from the past in 2021, every time price action has dipped into the zone here, it's been immediately bought back up, right? Dipped into the zone, bought back up. Even with these long wicks here, every time price dipped into that zone, it got bought back up. Here's another scam wick that came all the way down and bought back up. Price action came back below the 200, got bought back up, and then we had a nice uptrend. And you can see what I was talking about with the ADMA. ADMA is showing great support on the run up, right? It's also going to show great respect to the line on the way down, similar to what you're seeing here, right? ADMA showing great respect on the way down. So the thing is, we're already now quite a ways away from $3, right? Well over 50% down. Price action had a death cross here. Price action is fighting with the 20 SMA at the moment, still below the 50 and the 200, which from my perspective is a bearish trend. Coins like this, I personally don't like to trade. However, there are value buys here. And what that means is that, we have clear support in that dollar range, right? That dollar to about $1.10, $1.12 range. So if price action were, for whatever reason, if price action were able to reject from this range here and come back into this zone, this could provide us with a wonderful opportunity to take a position, right? It would be a great place to take a bet because in the past, the probability of it breaking is quite low because of how much support it's had here. And because we're trading so close to it now, we're at about $1.32, this would be a very great place to take a buy in that $1 to $1.10, $1.12 range because of what we've seen in the past. So from ADA, what I'd like to see is how it's going to respond in this level. At the current moment, we know where our demand zone is at the bottom. We also know we're trading below a very key level of support that got flipped with a throwback here as resistance. So we've had our breakdown, we've had our pullback. I'd like to see the follow through now, complete this move into the dollar range, and see how price action responds, and maybe it'll start to respond and roll out of this area and start to break above the previous lower high structure. And this is how we can kind of, work out our reversals, right? We're looking for price action to, start moving back above previous lower highs. And once it starts wiping out these lower highs, this is showing us that there's confirmation that price action is moving higher. So from a bearish perspective and from a buying perspective, once again, I'm looking in that dollar range for ADA. I'd like to see what happens there. Now, in terms of depth, okay, if we talk about the depth of this fractal move, this was an ugly drop. So far, price action has dropped. Like I said, it had dropped almost 61%, 62%. Currently, it's just under 60% minus. What I'd like to see is what it's going to do next. So if I were to just use our Fibonacci again to kind of guide us, let's just say it dips into that range again. I'm just going to speak hypothetically. In the event it does go down there, what can we be looking for? And what we're looking for is if we can get a nice bounce from here, from a midterm time frame, we are starting to put that projection into that golden pocket of about 4.3, the 2 fibs sitting around 5.15. So if we just round that off, I would say anywhere between $3.50 to $4 to $5. Pretty much a lot of this, the upper range of the Fibonacci here, right? The macro fibs would be great places to take profit. But obviously the golden ratio is very, very key from my view, as well as the 2 fib. So I'd be looking at, personally, that $4 target, in my opinion, would be a very, very key psychological level. And then, $5 is a very key psychological level. You could also say even 4.5. But, from my perspective, golden ratio is sitting right here. In the event that this does play out there, then this calculation works out. However, in the event that price action does not go down there, I can tighten this up a little bit. Do something like this. And what that does now is it just alters the price targets a little bit more, and you can now start to see we're getting closer to that psychological level, $4, and now we're tucked in, definitely under 5. But once again, I was talking about that $4 level. I just do think that that's a very, very key psychological level for Cardano, and everyone is looking for 5. And usually, when everyone's looking for 5, the market doesn't give you 5. So I would be very, very careful if you are taking trades in this coin and you're holding and you're wondering, hey, when do I take profits? Just keep a very, very close watch on that $4 range and up towards about the $5 range, because I can guarantee that there's going to be a lot of profit taking from ADA around that range. And this is just a midterm time frame projection. So those are the top 5 coins that were recommended or requested, I should say, from people who took the poll. I thank you so much for taking that poll. I am going to cover a couple other coins that were of interest to me that were honorable mentions. The first one is Atom. And Atom's been having a great one. I had made a chart here. I'm just going to delete this and start from scratch. But, it's had a parabolic run as of late. It's a coin that's in a great uptrend, as you can see here, right? Great uptrend, creating, a higher low here. Nice bounce off of 200. We got a parabolic move with good support coming from the ADMA. You can see now that we're starting to have some resistance now at these, the top that was formed back in October and towards the end of September. So we know that this is a very, very key supply zone here. And that's what we are getting when we look at this wick action, right? We can see that we're getting a lot of people selling because this is a top. So what this is telling us is, okay, well, if people are selling here, we are used to seeing throwbacks. So where's the next level of a throwback? Well, this is part of the issue now, is that because it's gone up pretty hot, a lot of people could be looking at these previous lower highs, right? And you can already see I already have my alert set here at about $33. So if I do see some price action dip back down to about $33, I'd be very, very interested in maybe taking a position, because we'd be getting a nice possible throwback opportunity to go higher. This would be a very, very good range. Now, it doesn't have to go down there, but it is a very key range I'm looking for. Another key range to look for would probably be in this pocket here. And I'll just map it with a thin red line here. Sorry, the mouse not working. But I'd be looking at this range about $38. Now, it's not too far off from here. So something tells me this could be just a minor level of support, but I do think it will break and that we will start seeing this price target hit somewhere in the 30s. I would assume that, you know, the moving averages are going to start to propel themselves higher, which would then give us more confluence in this range. So keep a very, very close watch of this range right here. It's a little bit wider than I'd like to have drawn it, but I'd keep a very close watch in this range to take a buy. Now, in terms of measuring the depth of what we're looking for, first things first, you can see we got nice confluence at the 618 range when it came for the retrace, right about here, which is really nice to see. I'm going to maximize this a little bit more. So we had good confluence off the golden ratio, which is really nice, and then a pop off. So we know that 618 fib line is solid. Where do we go from there? If I were to just use the fibs to map this out a little bit more, use the full range. This starts to give us price action around that $67 range up to about 80. So I'd say, you know, anywhere between 60 and 80 are great places to start scaling out of your position and skimming that profit, because prices are probably going to run a little hot. If I run that fractal measurement using this base here, this should line us up with about the golden ratio, which it does. You can see right here, tucks us in at about 70 bucks. So once again, you know, when we get to see that $60 to $80 range, this is kind of where you want to start taking your profits off the table just based off this measurement. So Atom's a good looking coin. Once again, I'm looking for entry on this coin to, you know, take another position, like a long position, if I can start seeing price action come back to have a throwback here in that mid to low $30 range. Be a great place to take a position and see if I can ride it up into this mid-term, mid-projected time frame. Once again, between $60 and $80. Next point I want to talk about, from my view, is ICX. Now, ICX had a great airdrop that happened. There was 2 coins, and I'll show it to you this way. So the airdrop happened, and, you know, the problem with these airdrops is, you know, we get pump and dumps, right? So people want to get access to these free coins, right? The airdrop coins. But the problem with that is once the snapshot happens, everyone dumps the coin because they no longer need ICX. And it's usually in correlation with, you know, support and resistance lines. Now, I already got one line drawn out here as I've done analysis for my Patreon members in the private channel. But, you know, we were anticipating this. And sure enough, you know, we had a scan wick go up, and it did close below our support line here, which is basically forming it into resistance. And we can see price action just dumped afterwards. So we're back in that range where we were pre-hype, right? So we're back in that consolidated range. So this is not actually a good sign for a coin like, you know, for this coin, because it's tucked right back in under this range here. I'll just map it out this way. But, you know, we can see that the 20 SMA is sitting right there. So if I just map it up this way, you can see it's getting the support is coming from over here in September, right? Rejection, throwback, or sorry, pullback, retesting the previous low at about $1, right? Hype pump, close below the resistance line, and throwback. Excuse me, pullback, all the way back below another key level resistance, just absolutely crushed, epic sell-off, and now back into that range again, sitting at that 1.2. So, you know, it is in a consolidation phase again. We are getting bearish crosses starting to form. All the MAs are pointing down again. I'd love to see this coin start to hold its position. There's a key level of support sitting right here at about $1.06. But, you know, once again, psychological levels, $1, right? $1 is a psychological level. $1.40 is another key level up here. This could sweep lower, like I said, into that lower dollar range. So be prepared. But once all this plays out, as long as all this holds up, what this is going to start to do is slingshot this coin higher, because it's such a massive correction. So what that means is if we have a massive correction, we should start to get price action moving back up towards higher levels. Now, I could use the anchor here as our low, or I could use the base here as our low. I'm actually going to use the actual true bottom anchor for this, because I want to just show you one thing. And if you notice here, when price action came down, we had a nice, you know, there was a retest here. You can see it has confluence at that 0.236 level. Now, mind you, this is an extension, not a retracement. But when the price action came up, it rejected at the 618 golden fib, which I also found very, very interesting. And then price action collapsed. So if price action can round out here, start to bottom out, find support here at that 236 fib, and then start to pull up, where could we see price action go ultimately? Well, once again, using our Fibonacci, we can see price action is looking towards that $4 range to the 4.8 range. And, $4 being a psychological level is a very, very key range, right? And the golden ratio. So I'd be looking at that $4 range. Definitely want to be scaling out of positions and waiting for re-entry anywhere from 4 to 5. Last coin that I want to talk about is a coin called Sand, because it is a very, very strong NFT coin and metaverse token. I have talked about this on Patreon numerous times and shared this chart. And the reason I like this chart is that it has been holding this support line very, very well. It's a huge pennant structure, right? We have a huge pennant structure. Now, it doesn't look like it's ready yet, right? We can see that, just from this perspective, time puts us towards, around third week of January, if this were to play out a little bit longer. But we can see that the moving averages are starting to pinch, okay? We can see that this is a nice flag pennant of sorts. This is a bullish structure. What I don't want to start seeing is price action, dipping below here, which is our 4.7 range. It would be breaking through here, but I don't want to see the horizontal range or support of 4.7 break, because then, price action would then go lower to about, sub 4 to maybe 3.8. If that breaks, you're talking about 3.17. And if I were to map those in, just so you can get a visual, we have a support level around here. Then we also have another support level around here. So, there's a tight range of support here in this range that, if we were to break below here, we'd be looking into this range. Now, in the event that we get price action break out from this range, right, we want to see price action start to close above this pocket right here, this range, sitting at about, 6.2. If price action can get back above the MAs, get back above the 6.2, we're already above the 200-day moving average. So everything's looking really good for Sand. It has lots of hype. This would be very, very bullish. This would be a very bullish level to break. The next bullish level to break would be where I have my alert set here. Now, this is a little bit more conservative, right, to take a trade once you see these lower highs start to get taken out, right? So we'd be looking for something, where price action could, do something like this, come back up, and right here is where you had that nice throwback, and then price action going a little bit higher. So two ideas here are, if price action breaks up, comes back to retest the horizontal level for the throwback, this could be a good place to take a position. The next place to take a position is if price action goes up a little higher, retests the previous highs, comes back for the quick throwback, this area right here at about $7, which is another psychological level. We could see price action start to then propel up to the higher levels. Now, if we were to measure our depth on this in terms of the fractal, we could use our, we could use the bottom wick here. I'm just going to be a little bit more conservative and map it out this way. But, this gives us a few different ideas. So the first idea is that we could start, based off this measurement, we could be looking at that $10, $10.50, $10.62 range. If I were to use the full extension of these wicks, this gives us, price targets, into the 12.5 range, right? So $10 to $12, good range to take profits. If I were to use Fibonacci now to mirror what I've shown you there, you can see that, we have confluence with the 4.14 as well as the 786 fibs, right? The 1.414, 1.786 fibs. The golden ratio sits just tucked in under $12, and our 2 fib sits in just tucked in under 14. So, either way, these are great areas to take some profits. This is a solid depth retracement, which once again, the deeper the dump, the bigger the pump on the way out. So I'd like to see where this coin goes. Hopefully it doesn't break down, but if it breaks up, this is going to provide a really, really good opportunity to jump into a trade to take it from, the $7, 7.25 range to, $10 to $12. So very, very good idea there. So today I want to thank all of you once again for being here. And I really appreciate your support. Make sure you subscribe to the channel. Hope you enjoyed the technical analysis piece. I run multiple videos a week on Patreon. So you can find us on Patreon. I charge $30 a month The description is, or the link is in the description box below. If you like what you're seeing, also run charts there. You can find us also on Instagram. We're also on Twitter. All the links are going to be below. And if you have any questions, you can hit me up on DM through Telegram, and I'll definitely get back to you there. So once again, big shout out to you. Thank you for being here, and hope you're all well. Have a great one.